What's going on, guys, and welcome back to another video. So it was requested by one of my subscribers that I make a portfolio breakdown in terms of what percentage of my overall capital have invested within each sector. So when I began investing, I had a specific percentage allocated to each sector. However, due to things such as dollar cost averaging and capital gains, these percentages have certainly moved over the last few months. So in today's video, what we're going to do, we'll have a brief look at my Trading212 portfolio overall, and I've also put together a spreadsheet on Google Sheets. I think doing this type of task every few months is very important for every investor because it ensures that you're not over or underweighted within any specific stock or sector. So kind of doing your own due diligence as well is very important, I believe, and having a good structure and framework. Again, it doesn't have to be bang on, let's say exactly 5% or 10%, but once it's there or thereabouts is kind of very important in my opinion. But just before we get into all of that, can I please ask, as always, if you're new around here, to consider subscribing to the channel, as our kind of main goal is to get to 1200 subscribers by the end of this month. And with all that being said, let's dive right on over to Trading212. Time of recording, we have about €8,050 invested in the market and are up about €1,000 or 14.3%. Now, a good way to structure this video, I think, is that we'll have a look very briefly through each of my sectors down here, and then we'll jump over to my Excel to see, firstly, what percentage of my overall capital is invested within that sector. Then we'll have a look at my kind of what percentage I actually want, and then my plans going forward for this exact sector. And the main purpose of this kind of exercise is to see what stocks are over or underweighted, again due to capital gain and also due to dollar cost averaging over time. For example, if one stock plummeted in value, you're probably going to pump in a lot more value if your strategy is dollar cost averaging to get a cheaper price over the long term. So firstly, we have communication services. We have €624 or so invested and are up 30.7%. The two companies are Walt Disney and Facebook. Walt Disney is up about 40 or so percent and Facebook is currently up just under 15%. So we have on screen here the Excel I'd done up just before this video. We can see this is totally at the moment about 7.75% communication services of my overall portfolio, and I want a target of about 7% or so. Now Facebook at the moment, I would invest further in that company if it drops a small bit in value. It's currently about 14% or so, as we just mentioned, but I wouldn't kind of invest further until it does drop, and Facebook has been a volatile enough stock over the last few years. So I do feel I'll get that opportunity again. So patience is definitely key in that factor. In terms of Walt Disney, we're up about 45 or 50% at the moment. So I don't really want to further invest into the stock at the time being because there's certainly better opportunities to dollar cost average across a lot other stocks that I hold. My next sector is consumer discretionary. We have about 1,250 invested at the moment and are up just under 4% or so, or 3.5%. The three holdings here, two are in the green in the form of McDonald's and Nike. McDonald's is up 8%. Again, this was a company I dollar cost averaged a lot over the last few months when it dropped in value. So it's kind of nice now to see it up at about 8% at the moment. And then Nike is up 3.8%. However, the third company here, Tesla, is down about 6.6% at the moment. Now this was down about 20 or so percent only a few weeks back. So I'm kind of happy that it's kind of recovering somewhat. This €1,250 or so equates to about 15.5% of my overall capital, and we can see on the right that my target is about 10% or so. Now I would have put more than 10% here, however, that I mentioned later on in the video in terms of utilities and materials. We currently have nothing in those, so I would have to allocate a few percent here and there. Again, we'll discuss all that later on. But for that reason, why I'm pushing it down to 10% instead of, let's say, about 15% or so. But in my opinion, again, I mentioned in a video a few days ago, Tesla tomorrow, once I get paid, I will be putting further capital into Tesla to take advantage of dollar cost average. As we just saw, it's down about 6.6% still. So I do feel there's a lot of wiggle room there to take advantage of the cheaper prices. So for that reason, my overall percentage will probably rise tomorrow. Although long term, I might want to kind of shave that down a bit in terms of my overall target. And that might be through taking profits from the likes of Nike or McDonald's. But definitely tomorrow I will be buying more of Tesla. Consumer staples, again we have about 1,250 or so and we're up 6%. Now I wasn't really planning on having this much of my capital invested into consumer staples. However, again I said at the start of this video, the main reasons why these allocations have shifted is due to dollar cost averaging and also capital gains. So for that reason I did invest a bit more than I wanted to at the time because of the dip. So again, it has kind of paid off as such, as we can see the three stocks here. Coca-Cola is up 7.6%. We then have the likes of PepsiCo up 7.8%, and thirdly we have P&G, which is currently up 3.3%. So overall, I'm very happy when we took advantage of dollar cost averaging here. But again, we'll see in the next kind of Excel here that we probably are overweighted within this sector. So I originally set out for this overall sector to be about 7% of my overall capital, and it's over double that at the moment. So that's kind of the importance of doing these kind of tasks every few months, because you kind of would forget what your original targets were, and it's currently sitting at about 15.5% of my overall portfolio. So my plan of action here isn't to actually sell any of these three stocks. If anything, because they're all in the green at the moment, I'm going to just leave them and start pumping money into my other sectors, which will effectively kind of drop my overall percentage within this sector in terms of my overall portfolio value. So for now, I'm going to leave the three stocks and probably not invest into those three unless one of the three kind of drops drastically. But the energy sector pie is quite an interesting one in my opinion. We currently only have about €450 invested and are up 12.6%. Now the reason why I say it's interesting is because originally when I started investing, I wanted to put a lot more money into the old school energy stocks in the form of Chevron and ExxonMobil. However, the second I started investing in them, they went up fairly fast, so we were lucky enough when we got in. For example, ExxonMobil is up over 60% and Chevron is up about 41.7% at the moment. So I haven't really invested further into those. However, in iShares Global Clean Energy, I wasn't planning on putting a lot of capital in here at the start. But again, because of dollar cost averaging, it did drop a fair bit. Again, I went into the reasons in prior videos, which I link in the description below. But the reason I did invest further into the iShares Global Clean Energy ETF was because it dropped, and it's currently after dropping even more, so it's 11.7% down. So again, just like Tesla tomorrow, I will be investing further into iShares Global Clean Energy with the main purpose of getting a cheaper overall average price. So they did kind of cancel each other out in terms of me only wanting a small amount in iShares, and I wanted more in the older school energy stocks. But the kind of roles have reversed, so now we're going to look at the Excel to see what percentage we actually have. So for the energy sector, I'm happy enough with how it's doing at the moment. Again, we have about 5.7% of my overall funds within the sector, and my target was 5%. Now, as I said as well at the start of this video, I don't really want to have bang on percentages because you'll be continually rebalancing your portfolio. Because at any given day, if a stock goes up or down in value, or you buy any other stock, all these percentages are going to change. So once it's in about 1 or 1.5% thereabouts, I'm kind of happy to leave as is. So for now, energy sector, tomorrow I'm buying the iShares Global Clean Energy even more, the dollar cost average, but the other two I'm going to leave for now. We then have a sector or ETF kind of summary pie that kind of breaks the rules of my overall premise of investing of dollar cost averaging and only investing further in companies when they go into the red. However, with ETFs, as we can even see on screen here, once you hold them long term, they rarely do go back into the red once they go up a good few percent. So at the moment we have about €765 invested and are up 17% overall. We have the S&P 500, which tracks the top 500 companies within the US, up 17.9%. And we have the FTSE 100, again this is the top 100 companies within the UK, is up 13.5%. So again, as I mentioned, I haven't done so yet, but I will be investing further into these ETFs. Again, there'll be small amounts I'm putting in at any given time, and I won't be using the dollar cost average kind of strategy here, because again, these ETFs are so diversified and they don't really kind of drop below. Again, like I can't really see these ETFs dropping 17% anytime soon. So that's the reason I will be kind of slowly trickle feeding funds into these ETFs in the long term. And when I will be doing that is when I have no other opportunities within the rest of my portfolio to take advantage of any dollar cost averaging. I think I mentioned in a prior video when I will be looking at ETFs or stocks, in that video, again is in the description below, that I wanted about 10% of my overall portfolio to be in ETFs at the moment. So we're not far off that, we're at about 9.5% at the moment. And I also mentioned in that video, the prior video I made, is that the bigger my capital gets, the kind of more I will be putting into the ETFs. So maybe when we get to, let's say, the 20,000 mark, I might lift this 10% target up to, let's say, 12.5 or 13%, and so on, because again, as your capital gets bigger, you need to ensure that it's protected even more. We then have my financial sector, which I'm quite happy with the performance at the moment. We currently have about 1,100 or so euro invested at the moment and are up just under 30%. We can see down here the 5 stocks. Visa is up 6%, MasterCard is up 11.3%, JP Morgan Chase is up 55%, Bank of America is up 53.6%, and Goldman Sachs is currently up 68.5%. So I'm very happy with how this sector has performing, and I do think we got in at quite a good time during the crash. So we're kind of reaping the rewards from that as such at the moment. But again, this will definitely have shifted my overall target. in terms of what percentage it currently is within my portfolio. So we can see on the screen that it's not as overweighted as I thought it would be. It's currently at about 13.9% of my portfolio, and my target is 10%. So again, we probably won't have an opportunity to dollar cost average in 3 to 5 of these companies in any time soon, in my opinion, because they're up so much value. So where I can see them getting further capital into the sector is in Visa and MasterCard, which we have been dollar cost averaging in over the last few months when it did drop in value. So if they don't go down in value either, then we're not going to be putting any further capital in here for the time being, which will probably effectively drop this 13.9% back down to the 10. €870 in the healthcare sector and are currently up 10% at the moment. We have 3 stocks, Johnson & Johnson up 11.3%, AbbVie is up 23%, which I was kind of surprised about, and Pfizer is currently up 1.5%. So the healthcare sector was one of those sectors that I wasn't really too interested in as such. I was a lot more interested in the likes of technology, consumer discretionary, etc. So the healthcare I just kind of had there for more of a diversification style aspect, but I'm kind of happy with how it's performing at the moment. We can see on screen that it's currently about 10.8% of my overall portfolio, and our target is 10%. Now this target will probably change in the coming months. I might actually reduce it down to, let's say, 7 or 8%, and is even as low as 5, but we'll see how it's going. And I would probably put a bit more of my percentages up to the top here in terms of consumer staples and communication services that I mentioned earlier in the video as well. But I'm happy enough at the moment how healthcare is doing, and it's pretty much on track. Industrial sector is another sector just like healthcare that I don't really have too much knowledge or interest in, to be honest. But we currently have €272 invested and are up 17.5%. The 3 holdings are 3M up 16%, Caterpillar is up an impressive 42%, which again at the start of investing this was hovering around the 1% plus or minus mark. So it's kind of interesting to see how it's jumped so much over the last few months. And Waste Management is currently up 12.2%. So we have a target of about 5% for this sector, but mainly due to lack of interest, and second of all due to, let's say, their performance been doing so well over the last few months that we haven't really got an opportunity to buy more within the sector. So that's why it's hovering at about 3.38% of my overall capital at the moment. But who knows, we will probably try to get this up to the 5% mark in the coming weeks. The materials sector, we currently have no holdings. Again, that's probably due to the reason of I can't really find any of value at the moment. So if you have any suggestions that you currently hold, please comment below and I'll be sure to look into those, as I would like to have at least one holding, just like my real estate sector pie here, in the form of real income. So with my materials, we want to have about 3% of my overall capital invested. So it's currently at 0, as I said, so we need to add a company in here at some stage. And then real estate, we only have the one company in the form of realty income. We only have 63 or 64 euro invested, and are currently we only have about 0.8% of my overall capital invested in this sector. I would like to push up to 5. So going forward as well, I probably would like to put more capital into realty income, but I'll wait until it kind of drops in value a bit first. But I would also like to add a second additional stock in this real estate sector into my portfolio as well. So if you have any suggestions, just like the materials, comment below please. Technology sector is currently my biggest holding with €1,330 invested, and we're up 17% at the moment. Now technology is probably my favourite sector in terms of firstly interest, and second of all in terms of opportunities going forward, I believe. So we have 5 companies here at the moment. Microsoft is up 15.7%, Amazon is up 3%, Apple is up 11.6%, Alphabet is up 41%, and IBM is currently up over 11%. So I'm fairly happy with how 5 of these tech companies are doing at the moment. And again, when I started investing, I wanted to cap my pies at 5 companies. However, I would like to add a 6th company into this overall pie, again because it's my favorite pie and it's also one that I think has the best potential going forward, as everything is tech related in my opinion. So again, if you have any suggestions on a 6th company here, comment below please. We can see that technology is currently 16.5% of my overall portfolio, and I even will have as much as 20% of my weightings towards tech. Hence why I want to look for another stock to invest in this sector. In my utility pie, we currently have nothing, just like materials, and I would like to have about 3% of my overall portfolio allocated here. Again, just to help improve my diversification. So again, just like my materials, I haven't found a company yet that I'm interested in here, but I'm going to continue looking. And then finally, penny stocks, we have one in the form of High Tide at the moment, and we only have about €45, which equates to about 80 or so shares. And we're up about 13% at the moment within this pie, or within this stock should I say. So it's only equating to about 0.5%, but long term I would like to have up to 5% of my overall portfolio capital in penny stocks, not just in high tide, but I would be looking for another one or two. But for now, I'm going to stick with high tide as I haven't really found any of value at the moment. So that's my overall portfolio at the moment and what percentages are allocated to each sector and my plan of action going forward for each of these sectors as well. If you found this video anyway helpful or interesting, it'd be much appreciated as always if you consider subscribing to the channel if you're new around here. And as always, it'd be great as well if you could smash that like button. And most importantly, if you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. Thanks very much, enjoy your Wednesday, and I will see y'all in tomorrow's video.